just your views on the market's performance today. We're also starting to see quite a few Q3 results coming through. Before we go into that, just your impressions of what's going to lift this market.
And basically investors are, because what we're seeing, look, I think once local investors begin to fully participate in the market, we should see some significant rise in the index, because currently it's, the playing field has been left to foreigners, with them contributing over 70% on a daily basis to the market turnover. But generally, the market should pick up more towards the close of the year. But what we usually see as we hit the December holidays is it drops off a bit as people go for their holidays and also sell off some of the securities to raise liquidity.
Okay, talk to us about the shilling. This is your area of expertise. It's still under pressure, Kenneth, at 100 shillings to the dollars. It's a better figure than we've seen, but it's still a currency that's feeling the pinch.
What's happening with the shilling, I think it's trading a bit range bound, because what's happening is all banks actually held to 10% of their core capital. They can't actually move a bit. What they're doing is mostly they're just covering their positions. And as we go into towards the end of the month, of course, we are going to see end-month supply coming in. Of course, we want to watch and see how this plays out on the market, because, of course, supply will be more or less more constrained than usual.
All right, let's talk about the results coming through. Equity Bank's results shows us profit after tax at 42%. And they've also said that it's largely because of the move into agency banking. So firstly, your comments on Equity's results. And then secondly, explain to me, what is agency banking and is it really the new way?
Actually, it's streaming. I remember speaking about, I think 3 months ago, about the impact that agency banking would have on the bank's bottom line. And Equity Bank have been the most successful bank so far in implementing this. They have over 2,000 agents countrywide. And what it does is basically anyone with a shop and with enough capital, and if their books they've been around for about 5 years, you're allowed to take deposits and pay out on behalf of the bank. So what this does is it allows the bank to go deeper into the grassroots to where the people are, even the smallest customer. And it also cuts down on the cost of, they don't have to open a branch in every corner of the country. So it's allowed them a lot more access to deposits. And also, of course, we expect the transaction income also to rise up. I mean, the equity results were pretty good, although you do question also the quality of the earnings, because if you look closely, you'll find that most of them came from the largest jump was in forex earnings, and this was expected with the turbulence we've seen in the shilling. And of course, we've also seen the effect of the rise in cost of funds, because their margins, what happened is their loan book seems to have grown by about 50%, and the interest income by about 30%. I mean, this shows their margins have actually shrunk. And I mean, this was actually expected, and I think we should see this across the board with most of the banks releasing their third quarter results, because the cost of funds has significantly risen.
Let's talk about those cost of funds in general. You mentioned the fact that so many banks exposed because of their forex trading and their investments in this particular sector. But there's also another category, and that's the fact that largely banks are the institutional investors on the fixed income side of the markets. They are the buyers of treasury bills, and with the returns also being fairly circumspect, there is a sense that the banks going forward are going to lose a lot of money because of this kind of exposure. How big will the impairments be? How big will the damage be?
I think most of the damage has already been done. We saw this, especially in the first quarter and second quarter results, and half-year results. So most of the damage has been done, because what we're seeing is rates are more or less holding at the current levels where they are. And we also don't expect the central bank to be issuing any long-term papers for the remaining quarter. So we should expect rates on the long end and the medium to longer term papers to hold. The short end, of course, we're seeing a lot of volatility, and this is basically because of the tightening policy that the CBK is putting up. They're in the market actually every week doing repos at levels as high as 17%. So of course liquidity will be tight, and this we should see the short end, the rates of the short end shooting up quite a bit. I mean, the 91-day last week shot up to 15.09%. And we also expect this year, although what's happening, CBK seem to be controlling this rate because the rise was only about 10 basis points. So we should expect the 3-month and 6-month T-bill to play around levels of between 15 and 15.50.
And very briefly, we've also seen some movement on the brewery sector side. EABL up 0.7%, and we've also been hearing about Tanzanian Breweries Limited and the performance of that stock in Dar es Salaam. Everybody's watching this because of the share buyback. It seems to be delayed, but it's been an issue going on for the longest time. And to that extent, EABL has flip-flopped significantly. Many people really questioning whether or not they're going to be able to raise significant cash to be part of this transaction. What do you make of it?
I actually think they will be able to, through the share issue on the Tanzanian Stock Exchange, the shares they're selling off, I think this will be fully taken up, if not by the Tanzanians themselves, by the East African community. I mean, it's a pretty good deal. The main disadvantage, of course, would be the liquidity on the Tanzania Dar es Salaam Stock Exchange, which is not pretty good, but also this is an advantage in terms of markets that are not generally very liquid, tend to hold their prices quite a bit and are not as volatile as other markets. And locally, of course, EABL is always a stock of interest for local fund managers and foreign players. So we've been seeing them coming in, coming out. Basically, I can't say there's more activity on the buy or sell side. It seems to be balanced out.